pips, lots, units that can be really confusing in trading. Maybe you have already experienced calculating risk too high or too low. But this is the end for that, because in this video we'll talk exactly about that and how you can calculate your risk from now on in the right size. So let's take a look at the chart and see how you can do it. Here we have an example. We're here, for example, in the Euro British Pound on the 1 minute chart. And I've written down a short reminder for you what is what. So let's see. If you are trading a standard, this is a standard lot. So this means 100,000 units. This also means you're trading $10 worth per pip. With the mini, you're trading 10,000 units. It's a size smaller, so you're only trading 0.1 lot, which makes $1 per pip that you are moving. And the next smaller size is the micro, which is 1,000 units and 0.01 lot. So this means it is only $0.1 per pip that you are moving. So what does this mean for you? We will make an example. The market is moving here, and as you see, it came up all the way to the last high. And now let's take a closer look. The market is making a new higher low and also starting now to make a new higher high. This is a possible entry for us. So let's say we enter the market here, making a position going long. And now is the question, how much money do we want to risk? And as you see, here we have the number of units that we know here that 1,000 units would be a micro lot, meaning we would move $0.1 per pip value. So let's say in this case, we will trade with the 1,000 units, so with one micro lot. Now let's see how much money we would risk. That depends on the area where we would put our stop loss. So in this case, we would put this stop loss, for example, here to leave a little bit room for the market to develop in case it comes down into this area again before it goes into the long direction. So we see here, we have here our entry point at 0.86451 and our stop loss at 0.86111. So the last digit is the tick, but what is relevant for us is the pip size. So we are here, the second digit from behind is our pip size. So let's see, we are having 11 here, which are relevant for us in changing. So I leave out the last digit, the tick, because I want to count the pips now. From 11 to 45 means for us, these are 45 minus 45 minus 11, which means 34 pips. So let's see. 34 pips are our risk, initial risk. This means in this case we are having 0.01 lot makes $0.1 times 34 pips equals $3.4 that we are risking in this case. This is the smallest size you can risk. The micro is really the smallest size you can trade. So in this case, for this trade, it is the smallest amount that you can risk. So for example, if you have only $500 to trade with, this would be your trading size. But let's see for the accounts that have a bigger size, which can risk more. So in case we are trading a mini, for example, we would have $1 instead of 0.1. So we would be risking $34 in this case. And if we would trade a standard, this would be $10 times 34 pips. So we would end with a risk of $340. So in this case, for example, if we're trading with the target and put our target here, because we say there's a high possibility that we reach the last high. Yeah, let's see, this is probably a 2-to-1 risk-reward ratio. So let's see, you have a risk of $340 with a possible return of around $700. So this is an example how to calculate your position size. So the last question we have, what account size would we trade this? So for example, let's say we are risking $340. If we are having a $10,000 account size, let's say our account size $10,000. So for a $10,000 account size, $340 would be 3.4% that we are risking. For experienced traders, this is totally fine. But please, people, if you have less than $10,000, for example, don't trade with these sizes. Don't be shy, don't be greedy, and trade with a standard, for example, if you have only $1,000 account size. Let's make a really simple example. If you have $1,000 account size, how often do $340 fit into it? 3 times. So after 3 losing trades, your account is totally blown up. This is not what we want for your trading account. But 3 trades in a row can be, of course, losers. We are in trading, not in fortune telling. It can always be that you have even 3 times a trade in a row that is not ending well and hits your stop loss. This is possible because we also always have drawdowns in trading. That's totally normal. It's not even possible to trade without drawdowns and sometimes loser trades. It's just important that we have more winner trades, which doesn't mean that you can't have 3 in a row. So this is the reason why it's totally a big fault to trade with, for example, 1 lot if you have an account size of $1,000. Because if you have, for example, instead the mini, you can do this not 3 times, you could possibly do this 30 times. But this is a lot less possibility that you have so many loser trades and that you have 30 losers before you have 30 winners again. So for experienced traders, this is a totally proper risk management to trade up to 5% risk per trade. But for beginners, I would always recommend to trade not more than 1% risk per trade. Please, people, gain experience first. Gain experience first with small money, because that way you will still have money after you have gained experience and made your faults. Sometimes, of course, it is a part of learning. Sometimes you will do mistakes, but make sure that these mistakes don't take away your whole account. Make sure, even if you do them, of course, try to do the least mistakes as possible. through learning first, but also make sure that drawdowns, and sometimes especially in the beginning, don't destroy your account. This is really essential because what you want to do is good trading, and you can't do this without a trading account. Please keep this in mind before you start trading. Calculate your risk really thoughtful, and always keep this in mind. Don't get greedy, don't get afraid, do a proper risk management. If you do a proper risk management, your emotions can stay out of the trading and you won't lead to mistakes. If you want to learn more, click now below this video, and there you'll find the link to my Telegram group, which is totally for free to you. And for now, this is it with this video, and I will hopefully see you next week with a new video. Bye bye.